Welcome back to the UK Crypto Podcast. I'm Paula, and as always, I'm joined by Matty. Crypto tax in the UK is about to change, and the man sitting opposite us has been in the room while those changes have been shaped. Right now, something as ordinary as using or swapping a stablecoin can create taxable disposals. If you lend your crypto, borrow crypto, or put assets into a liquidity pool, the tax treatment can sometimes feel completely disconnected from what's actually happened economically. But reforms are now on the way. Today, we're joined once again by Jamie Nuttall, the UK's #1 award-winning crypto tax accountant, and someone who's been taking part in HMRC roundtable discussions on the future of crypto taxation. We're going to find out what's really been happening inside those discussions, what the proposed new rules could mean for stablecoins and crypto loans, and most importantly, what ordinary UK investors need to understand before these changes arrive. Jamie, welcome back to the UK Crypto Podcast.
So, Jamie, before getting into all the technical details of what's been going on, just tell us about how did you even get into that room with HMRC? What was the journey? Because I don't know anybody else that sits in the position you do with HMRC. So tell us about that.
So, yeah, it started a few years ago when HMRC had these consultations, which is an open sort of forum for people to reply to via writing, usually maybe an email, to really participate in whatever the topic might be. And that's how it started out. Then through other people in the space, it was just a case of knowing the right people and them knowing what I do and what I have done for clientele. They sort of realized that we were one of the leaders in our space and what we do, and therefore we got an invitation basically to have a chat with them initially face to face about some other things, and then they started to really send out the emails when we have these group discussions saying, look, we want you to participate because of your knowledge. So it did take some time, and it's just been active when you have the opportunity to reply to these consultations, because anyone can do it, and that was the start of it, and then it snowballed from there.
So what is your role in these discussions? What happens? Because honestly, I know that you're in them, but I don't actually understand what happens.
Yeah.
I think most of the viewers won't either.
Well, no, because we talk about these meetings and they feel like they're behind closed doors, don't they? So maybe you can share a bit of that.
Yeah. So what is your role there? What's it look like when you're in there?
So it is a closed door meeting. Don't get me wrong, but they have something called Chatham House rules, which basically means I'm allowed to say what was discussed, but I'm not allowed to say specifics as to who said it, etc., unless it's me specifically, of course. But these tend to have a very strict agenda as to what they're trying to get out of it. And for the ones that at least I'm involved with, it's more around, does this work? What are the issues about it? Where are the loopholes? How can we develop it? And it usually stems from the consultations or the initial consultations where people write to say, this is what you should do and why to achieve what you're trying to achieve. Now, my specific role in there is, because we've got accountants, we've got advisors, we've got lawyers, we've got all these sort of mixture of people, normally about, I would say, anywhere between half a dozen and a dozen of us, with lots of different angles, with a specific narrative of crypto, obviously. Where I sit really is sort of the tax professional / degen. So I'm the one that goes, hold on, this doesn't quite work from a practical perspective because of X, Y, and Z. And sort of my experience with my clientele really helps with that. And I can angle it in such a way that there's a tax narrative with it, which therefore becomes appropriate for HMRC, if you like. So I'm sort of at that border. There's a couple of others that are similar to that. I'm sure Recap don't mind me mentioning them, where Recap have a very strong crypto knowledge from a foundational level, and are able to put that across in an appropriate way that HMRC and others around the table can understand. So I sit at that's where I personally sit.
Yeah, so maybe you can't mention who's in the room. I don't actually know what the rules are, whether you can or can't, but what type of people are in the room? So you've got HMRC, who you just spoke about, you've got yourself, which is a
lawyers.
You've got lawyers. What are the types or industries are they coming from? Or
so these tend to be very intelligent sort of policymakers, regulatory people from around the UK. So, I mean, that's pretty much who goes into these things, because when we're talking about crypto policy affecting sort of the bookkeeping and the tax, ultimately, you do need tax and lawyers in there mostly. But there's like I said, anywhere between half a dozen and sort of a dozen of us, depending on the topic. If it's not too tax heavy, then we do expand that into other sort of stakeholders within the industry.
yeah,
Are there some real concerns that are always flowing through these meetings? Is there like a general theme, or is it more specific topic led?
It does depend on what consultation is being talked about. The sort of most consistent theme I found across the couple that I've been involved with over the years are, how can someone take advantage of this? What is the actual tax benefit or adverse effect with all this? And sort of where I sit personally is more of a, you're trying to achieve this. This is actually how it works. What you're doing does or doesn't work from a practical sense. So yeah, I would say it's mostly around how can people create loopholes to either benefit themselves or to, you know, sucker someone else into something negative and malicious.
I've got an off-topic question.
off topic.
Do you get the vibe that HMRC are out to try and make more tax money, or do you think they're trying to work for the average person to benefit just normal people's pocket? What's your... I don't even know if you want to share that.
Before we answer that, can I just add something to this? Whenever I make content on tax, the overriding vibe of comments, even if it's positive news to do with tax, is A, they'll say they'll never let it happen, or B, if they're letting that happen, they're going to have us off with something else.
Yeah.
That is always the vibe on my comments. Even if I was delivering something fantastic, like, for instance, the FISA tax-free Bitcoin exposure, really positive
People
news.
want to know where the catch is.
The comment
Yeah.
was like, well, first of all, was going, yeah, never happened, even though I was telling them it's happened. Like, they were saying never happened. And then I would say, and then there was probably about 25% of people was going, fantastic, interested, how do I find out? And then another percentage of people that was going, that's great, but where are they going to take us off of somewhere else? Because they'll always try and take more. And that's always the vibe on social media, even if you're delivering good news.
So, and I think it's very important to phrase it and frame it like this. Crypto is currently not on a level playing field with other assets. It is just not.
Ooh.
We have not historically been able to wrap it in an ISA. We have not been able to do certain things like rollover relief or holdover relief, all these things that other assets tend to be able to do. So it isn't about HMRC giving or taking or anything like that. It's just HMRC going, we acknowledge that there is a gap, a disparity between crypto and other assets. We are trying to make sure it is a level playing field for all assets. For example, I don't believe there is any asset in the entirety of the world where you cannot legally jointly own, especially with your husband or wife. You know, it's very easy to have jointly owned assets. Now, in the crypto space, how do you prove that? Because you can't have a joint KYC account. You can't have like Mr. and Mrs. Smith both under the same exchange, for now at least anyway. And it's those little things, those little nuances that mean that there is no level playing field for crypto assets. So, for example, if you two were married, for let's say, for example, and you wanted to share a bank account, you can do that very easily. But how would you go about sharing a crypto portfolio? Probably possible, very difficult. So again, just be very precise. It's not about HMRC giving or taking or whatever. It's just getting on a level playing field.
Yeah.
So I'd like to add something to that. I don't want us to get dragged into a big conversation about it, because actually I want to do a whole podcast on this subject.
Yeah.
So, but let me just say to you now, I think what you're describing there in crypto is absolutely needed.
Yeah.
Because I'm seeing too many people that are messaging us saying, my father's passed away, my mum doesn't know how to access his crypto.
Yeah.
My brother's passed away, and I'm seeing it all the time.
Yeah.
Whereas if we're in a situation where at the moment a husband dies and the wife then needs access to bank accounts, to savings accounts, to stocks, there's systems in place. But in crypto, it doesn't exist. And I think that hole needs to be plugged.
Yeah.
As I said, I don't want to get dragged into it now, because I want to do a whole episode on this at some point.
Yeah, I think it's really
definitely
important.
Quick note on that one. I know a guy that can solve that problem.
Oh, awesome.
Do you mean
okay.
for the podcast, or just mean to solve the problem in general?
Both. So drop me a message afterwards.
Okay,
Nice.
up for that. Love
Awesome.
it. Another guest.
So when you're in these rooms having these conversations, do you feel like HMRC is taking on board what you guys are suggesting.
Yeah, they're receptive.
Yeah.
Yeah, absolutely. Don't get me wrong. There's certainly an air of skepticism with anything that anyone comments on. Yes, there's a lot of barriers to be in the room. So if you're in the room, they will take you seriously. They wouldn't have you in the room if they didn't. Right. The agenda is normally set by HMRC, of course, as well. And they tend to get this from internal discussions as well as consultations and those who write in and sort of what we say. So, for example, when we were talking about the tax-free stablecoin situation, they were talking about only GBP-backed stablecoins, and I made the comment that would not really achieve anything because they're trying to achieve a lesser administrative burden for individuals in the UK. And I said, if you didn't include at least USDC, then you wouldn't achieve anything from that regard anyway. And I explained my case, and as far as I'm aware, I don't know if they've accepted that is the case or they are looking into it. I'll need to check the latest consultation. But as far as I'm aware, they took it on board, and I believe they are looking to include stablecoins generally, because the wording does say there will be a criteria of what stablecoins would be under that. So it doesn't say GBP backed anymore. So there is a change there. So they are definitely receptive.
Okay, right. Now, before we get on to, because you've got some really good news to tell us about some changes that are happening. But before we get on to talking about the changes, do you want to just explain to people why changes need to happen and what was the effect on the end crypto user? And then we'll get on to what the results have been.
Yeah, so there's two things here. The first one is a DeFi. There's a guidance from HMRC around DeFi lending protocols. And people assume if you stake your Solana, let's say, on a DeFi protocol, that you just receive a taxable moment when you receive the staking rewards, which is understandable. The problem is, in these situations, sometimes depending on the contracts, when entering the protocol, you have disposed of your Solana, which is a taxable event, which doesn't make sense if you think about it as investors, because I still have economic benefit. Why am I paying taxes on something I still own? So this came out, I think it was in 2021, and that we've been screaming about it for years now, saying this is not right, this is not how it should work. And then the other side of it is stablecoins is just a pain in the backside to handle, because you could have hundreds of thousands of transactions with very little overall net gain or loss, but you have to calculate each and every one because it is not currency, it is an asset that is pegged to currency. So those are the two problems that are currently being looked into. The reason for the first one is we've been screaming about it. We don't think it's fair. It's also more admin, and most accountants don't really understand it, so how they're supposed to deal with it. And then the second one is it's just so much time and effort for HMRC, and I think the timing of it is in line with, I'm expecting an onslaught from HMRC investigations. So this cuts through all that rubbish that will eventually be a net zero or close to. So it's a little bit of a warning shot as far as I can read between the lines.
Okay. So tell us about the changes.
So the first consultation about DeFi loans is very interesting because, like I said, if you go into these protocols, you might lose beneficial ownership, which means there might be a taxable event. This also affects the fact that when you borrow against Bitcoin, similarly, your Bitcoin could be deemed as disposed of. Therefore, you are crystallizing a gain or a loss. And most people in this situation borrowing against, say, Bitcoin are doing so because they don't want to crystallize the gain. That's the whole point of it for most people.
Exactly.
So with these changes coming in, we could be in a position where we just don't have to worry about this anymore from a DeFi perspective. Fantastic. I can do as I please. Nothing to worry about until I have a genuine economic disposal.
Right.
But more importantly, I might be able to borrow against my crypto. And I know I've been screaming about this for a long time, saying you can't do that. You might be disposing of your assets. This might change very soon so that you actually can.
Okay.
I think that's an interesting one, because I think there's also a lot of confusion around this subject, mainly because of the American influencers talking about it. Quite often they'll talk about LLCs, they're loaning against your crypto, and there's some big influencers that talk about that.
Yeah, and the rules are different in the UK.
The Brits then assume it's exactly the same for us, and it's just not the case. To the point, I actually don't comment anymore when people say, because there's so many, I would need a full-time person to reply to those messages. But yeah, it's a real common thing.
Yeah,
they assume it's the same as the States, and it's just not. It's just not. But hopefully, though, it sounds like there's a positive step forward, because judging by comments whenever you talk about lending against your crypto, there seems to be an appetite for that in the UK. People talking about when my crypto holdings become this size or I get to that level, then I would like to loan against it.
Yeah.
So they're talking about the future. So actually these changes coming in could actually fit quite well with people's future plans.
Yeah.
You imagine if next time we have a serious bull run, not like a tickle we had last time, but a serious one, and then there's some serious wealth kicking around. I think there are a lot of people in the UK that would potentially look at that.
Yeah.
I think a lot of people.
And I think the reality is most people want to do the right thing. They want to make sure that they understand the implications that it's going to have on their investments. And actually, they probably want to report it in the right way. But what it sounds like to me is at the moment, it's just really complicated to do that. And a lot of people probably won't get involved because they're worried about not being able to do it in the correct way or them being open to having done something wrong. So I think this clarity around the rules is going to make a big difference to a lot of people.
Would you loan against your crypto?
Yeah.
Yeah? Yeah.
Absolutely.
I would consider it as well.
I think the
100%.
reality is when you're in this space, you're looking at these opportunities all the time. And what else can we do? How else can we benefit from being in this space? And how can we use these protocols? If there was more clarity around that, and it was clear, and we could understand the implications, and we could get our reporting right, I think more people would do more of this.
But it makes sense if you remortgage your house. And basically loaning against a property for, let's say you go property cash and you wanted to go to loan it, you're not getting taxed on that, are you?
That's a bit more complicated because we've got personal primary residence status. We've got all sorts in there, but effectively no, in most cases you wouldn't.
I think
but again, we're going back to the concept of making sure everything is at a level playing field because it just doesn't feel like it is. If a similar concept is if I put my money in the bank. Now, question one is who owns the money in the bank? Let's not dive into that rabbit hole.
Yeah.
If I put my money into the bank and I earn interest, why is that not better a disposal? It doesn't matter because it's money, but why wouldn't that be under that regime in the first place if it weren't, to be currency specifically? And then, it's just getting that to the level playing field. But that's one consultation that's open at the moment and is actually gaining some serious headway with it. Again, your viewers and listeners are welcome to look it up. All you have to do is type in DeFi loan UK crypto consultation and it will pop up. It's changed its names a few times, so apologies. But the other side of it is the stablecoin situation where we're looking at basically any stablecoin activity is tax-free. Now, from a tax angle, it doesn't make a difference for most of us investors. It's just from a compliance perspective, we can just cut all that off the reconciliation process. If that's the only thing you do for some reason or have done for that particular period, you don't have to report it because it's outside the scope. That's also gained some headway. And it's important to note that both of these are looking like they're going to be not guidance, but legislation. Again, I don't know if that's public news or not.
We've had a lot of talk from the government and HMRC about stablecoins recently, haven't we? So it's nice to see that we're coming towards the end of that and things are going to be finalised. Because when they first put out their idea of what the framework was going to be for stablecoins, it created a lot of controversy. And I think we just now, instead of talking about it, we just need a clear understanding because most people feel better about things when they understand what the parameters are. And you have a voice at that table to try and look at what those rules are going to be, but the average person doesn't. So let's hope that this comes in sooner rather than later, I think.
I think it's sensible because this is about the no gain, no loss situation, isn't it? I think that's what we're talking about here. And that makes complete sense. I guess that's also... actually, when we talk about the stable coins, it's definitely going to be involved in that one. It's going to cut down some of the work.
Yeah.
Isn't it? Like unnecessary work that a crypto person needs to either do themselves or pay somebody to do. And it's just going to cut that down. Yeah. I think. Am I right in saying that, by the way? I'm guessing there.
That's absolutely that. And it also means that HMRC don't have to go through as much data if they need to inquire about it or anything like that.
For them. Yeah,
everybody wins for... The effective tax position is supposed to be net zero on average across gains or losses, definitely. There's definitely some tax planning to do before this comes in, mind you. I don't know if you want me to go through that now or as a last comment.
Okay, let's do the stable coins and maybe we'll come back to that potentially. So if we've got time,
absolutely.
then I'll be interested in talking about that for sure. So let's talk about the stable coins because this is the one that's exciting me the most with the news, to be honest. Because I think most people don't realise that there is these tiny little gains or losses that need to be reported, because I didn't know, Jamie, until you told me, and I live and breathe crypto. Until you told me, I had absolutely no idea. I was absolutely convinced that this is pegged to the US dollar. I say it again. This is pegged to the US dollar or whatever. And I hadn't considered the differences between the two currencies. And that is causing an issue, and probably loads of paperwork and bookkeeping and all the rest that needs to be done for hardly any kind of numbers that makes any difference to our government, and virtually no difference to an end user, unless you're doing billions in stablecoins. Who on earth is that affecting? So tell them a little bit about this, because this is the one I'm quite excited about.
So the fundamentals of it is, one, stablecoins are not currency. It's that simple. They are digital assets, just like Bitcoin, just like Ethereum, just like Solana, just like XRP. They just happen to be pegged to the dollar, GBP, whatever it might be. So what this means is because they're not currency, there is no exception for capital gain or loss. And as we all should know by now, any transfer between, or any swap between one asset to the other, is a disposal. So when you combine those two or three little bits, you get the point where you go, hold on, so every time I go from USDC to Bitcoin, or USDT to Ethereum, whatever it might be, there's that, like you said, that small gain or loss. Because if you are a UK tax resident, GBP is your currency, but USDC is what it's pegged to. There's going to be a fluctuation between the two. Normally, it's not, like you said, not anything crazy. Depending on the timing and the amount of sort of monies that are involved, it could be huge one way or the other. And yeah, exactly that. It's very annoying. It's not really necessary for most investors, or the average investor, because across the board, we're looking at a net zero situation. So they've introduced, or they're looking to introduce via the consultation, this nil gain, nil loss, or no gain, no loss mechanism for stables.
So I guess there's two things. One is, it's going to become easier to spend your crypto through cards.
Yeah.
So, for instance, Tangem are looking at, in the future, there's going to be the option to
Well, they've launched it worldwide now, just the UK, waiting for the FCA
yeah,
to sign it off.
So we're waiting in the UK for being able to use your crypto and have a card and actually spend it.
Uphold have got a card now.
Yeah.
Bitchnix have got a card now.
Exactly.
They're all rolling these cards out.
So if you're going to use your
Revolut, you can use Revolut in the UK using crypto.
So if you're going to use your stablecoin on a card and make transactional payments, that is going to effectively be a disposal of your crypto every time you're using your card, which is soon going to
millions of little transactions
for people. Yeah, absolutely.
That was the exact sort of case study that I proposed to HMRC. I said, look, this is what I'm expecting, and this is what is likely to happen. And if you were to load up with USDC and just spend it, you've got transactions. It's going to be a big problem. Whereas if you load up with, say, Bitcoin, then convert to USDC, that's that one transaction, and then all the taps doesn't matter. So again, it just gets rid of all that burden, because I agree with you guys. We're looking at a future where this is going to be a lot more common.
Absolutely.
Yeah, I think it's going to be completely widespread. I think there'll be some people that won't even cash out to their bank.
Yeah.
That they literally will just, same.
Yeah.
Same.
Yeah.
Absolutely.
Yeah.
So, I mean, I don't mind sharing this morning that I used a card this morning, and I paid with crypto for my McDonald's breakfast this morning. Like, that's literally did that. I used a stable coin, and I paid at there. Now, fast forward 5 years, I think huge numbers of people are going to be doing that.
Yeah.
Huge numbers. And that, imagine that admin work, imagine the bookkeeping, is that the correct phrase, bookkeeping, but like the login, the sifting through it. It's just going to, the weight of work, I mean, good for an accountant, because great for you, but not good for, and probably not sustainable if everybody starts using stable coins or crypto for payments. So yeah, I think this is a real positive move, and I like this one.
Well, I think it opens the door for do enough accountants understand crypto and the obligations to report, because that's going to leave a lot of people trying to do this themselves, and a lot of people are going to feel really overwhelmed, aren't they? Especially if you've got thousands of transactions you're trying to reconcile. So yeah, hopefully just a little bit of clarity. So you're talking about this is in consultation at the moment. Have they got an end date, an end goal?
They do. I can't remember it off the top of my head. But again, if you look up the consultations online, they'll give you a strict deadline as to when they're looking to close it. If you have a look online, there should be some information as to when it's open for, what they're trying to do. I can't actually see when the deadline is, but I know they're trying to include this in the 2026-2027 finance bill. So I would say it's not like a year or so. It's going to be a lot less than that.
Yeah.
Okay.
Yeah.
So what I want to talk to you about now, because I guarantee as this news spreads, what we're going to see is content creators making content with the strapline of tax-free stablecoins, or they'll be tax-free for the thing. Now, often when I think something is going to be tax-free or is tax-free and I use it, you often pull this face, right? You often pull this face, right? So just to add some clarity, are these going to be made tax-free, or is it way more complex than just calling it tax-free and slapping that label across your thumbnail?
For the first time in our relationship, the stable coins within the parameters of HMRC will be tax-free. No
Come on, I can use it on my thumbnail. I can use it without him going.
However,
why does he spoil it? Why does he do it? Why does he do this?
It's always a however.
realistically, it's going to be, like I said, realistically, it's going to be a net zero gain or loss. So it's tax-free, brilliant, but tax-free and 0-0.
Yeah.
Yeah, I know, but it's good that people can firmly understand that it is tax-free to do that.
Yeah.
Rather than all these millions
I actually think a lot of people are going to go, oh, I just didn't even realise that was...
Well, I didn't know.
This is exactly it with both situations on the consultations. People don't realise that going into a DeFi protocol could be a disposal. People don't realise, so they assume it's not already. People assume stablecoins aren't taxable already. And please remember, it's not going to be all stablecoins. It's certain parameters around that which is, to be finalised. But again, we're going back to the concept of making sure we get to a level playing field from not just other assets, but from an expectation and a reality perspective, because stable coins are just a pain in the backside to handle, and the capital gain or loss is going to be net zero. And then when entering a DeFi protocol, like, we don't lose economic benefit of the asset, we're just using it to generate further rewards, for example. So it seems very fair.
And the gain is what should be taxed rather than the other bit.
So I did a little bit of research, Jamie, because I knew I was going to be talking to you about this subject. I did a little bit of research ready so I could prep for the podcast, and I found something which was really interesting, which was I actually used ChatGPT. I don't mind saying that. I used ChatGPT to do a little bit of research to look at what was going on. So I had sort of base knowledge to talk to you about today. And one of the things that Chat had found was somewhere delved in a document somewhere, was that HMRC were potentially looking at whether they could activate this retrospectively backwards as well for people. Do you know anything about that? Have you been involved in any talks to do with that?
Yes.
Well done. I feel like ChatGPT called a good question there.
It's definitely something that's always going to be considered with these types of things. Is it going to be retrospective? Is it going to be straight away? Is it going to be in the future? I think the jury's out for that one at the moment, because there's a lot that needs to be looked into. I mean, if it is retrospective, I doubt it, because people should have been paying taxes on it thus far. And if they have, can they sue HMRC? Can they get a refund? If it's the case, But if we're talking about stablecoins, it's going to be net zero across the board anyway, so it's not really going to be worth much. So retrospectively, maybe. Usually with these things, it wouldn't be retrospectively.
That's Jamie's cat.
Is that a cat?
Oh, didn't know you could hear the cat.
I think your cat's hungry.
I've got 3 cats, and just chill. I'm live.
Actually, we're not live. It's being recorded. Okay, so that's fair enough. So we think that potentially it could be in play, maybe to be retrospective, looked at backwards, but who knows? That's still in the mix, is what we're saying.
I don't think it matters ultimately. I think it's highly unlikely, just because it opens up HMRC for all sorts of issues if it were. But again, who knows? Because it doesn't matter.
Yeah, absolutely. So it sounds like a big change technically for tax, but could it have a bigger effect on whether crypto businesses and innovation stay in the UK, do you think?
100%. So this is the biggest, I think when this all came out, this was the biggest proposal for changes in UK tax history for anything to do with crypto. It was just because there was one more thing on top of all this, and it's not a great news. It's to do with the HMRC power to investigate people within the crypto space. But again, combine all these together, we've seen huge changes. I think it will certainly be more enticing for businesses to go, oh, I can accept stablecoins and I don't have to worry about the tax situation. I just take it in, account for it as income, done. There's no gain or loss. Fantastic, you know. I've seen a lot of these terminals now accept sort of tap cards for Bitcoin, stables coming out. And then, of course, we've got the other side of it where the likes of Tangent, Revolut are actually converting it at the point of tapping your card into fiat. So I think a lot of people will start to be more open to it, which in itself would at least give opportunity for businesses to come out, whether it's it could be something as simple as creating a POS system specifically for this that's a bit more user friendly, or it could be something crazy like an international stablecoin to stablecoin OTC counter where you're looking at, you know, I want to use my stables in GBP in, I don't know, Australia, or whatever this stablecoin would be there and be called, but I don't know how to interact. So there's time and money to be made for the middlemen in the situation, definitely. And then, of course, there's going to be lots of advisory work, thankfully, for someone like myself to advise companies around all of this and how best to set it up for a frictionless situation.
Yeah, absolutely.
So the changes are planned for 2027. But in advance of this coming in, what should people be doing? What kind of plans should they be making potentially ready for when this comes in?
As a whole, just keep your eye out and your ear to the ground for U-turns, for dramatic change. I don't think it'll happen. But there is one sort of tax planning opportunity that is so niche depending on who you are. But if you fit this category, it's going to be one of the best tax planning things you can do in the next year or so. So it goes like this. If you have a load of stablecoins right now for any reason that you're sitting on, that is not in your local, sort of in GBP. So let's say you got USDC. If you're sitting there with a load of losses, after this comes in, let's say it comes in before the end of the tax year. So 6th of April, it changes, for example. It's not retrospectively. This is why I don't think it will be. If you're sitting on a load of losses and you don't crystallize those losses, you lose them. So it could be £1,000, could be £10,000. So what you want to do is actually crystallize those losses by disposing of your USDC in that case before the 6th of April. So therefore you can use it at any point in your life. So we're combining a few bits and pieces of tax knowledge. Yeah. Effectively, crystallize the losses before, fantastic. Now, if you're sitting on the other side of the fence and you're sitting on a load of gains, don't crystallize it till the 6th of April, and then all those gains are now gone. Tax-free. Now, you might be thinking, oh, but Jamie, overall it's net zero. I agree. But the odd investor who have £100,000, £500,000 in stables are sitting there going, hold on, that might be like a £10,000 differential there.
Yeah.
You know, and if you can lock in a 10 grand loss.
Yeah.
Clever.
Perfect. 10 grand loss or skip the 10 grand gain.
I gain from that the most. Obviously, there will be a few rare people with giant amounts of stable coins. It's going to be businesses. There's going to be some big crypto holding businesses, and they're going to be, hopefully, got accountants that are going to be able to be all over this for them.
100%. And if you think about how...
Do you just have clients that are people, or do you have businesses as well? So if you've got big businesses that have crypto, so just wondering, that's going to be a thing, I think, isn't it? They're the one. If I can imagine who's going to be holding the most amount of stablecoins, it's going to be big businesses for whatever reason that are dealing in certain areas, I think.
So I've found at the moment, because the market's been going sideways for quite some time now, people are more likely, on average, but people are more likely to hold stables to try to park their funds and kind of dip in and out. So I wouldn't be surprised if there is at least one whale watching now going, I'm holding £1 million worth of USDC. That could be a big gain or loss here. I need to double check with my accountant to see, hold on, do I want to dispose of it and crystallize those losses? Fantastic, you've just beat the system. Or do I want to wait until it ticks over and then go, bang, crystallize those gains? Oh, look, they're tax-free. Fantastic, carry on.
Okay.
I think that's a really interesting one.
Yeah, I do as well.
I wonder if we'll be running a story at some point saying, so-and-so business has just whopped out $4 million worth of USDC, and they've just waited a week and they've gone and bought it back again. Yeah, well, and you don't know what the rules are going to be. Whether there need to be a gap.
30 days.
There
yes,
you go.
30 days.
I to say that, yeah. But I wouldn't be surprised if that's definitely a thing, especially with the biggest of the holders in the UK. Why would they not?
Stablecoins is easy though with the 30-day rule, because you just go from one stablecoin to another and then go back after 30 days if you want to.
Yeah, because it's just buying the same asset back, isn't it?
Correct.
Yeah.
Happy days. I think that's been really good. Jamie, let's talk about yourself. And obviously, you guys have got Miner. What was the official name then? Miner L2, I think it was called. Is that correct?
Miner L2 Accountants.
Yeah, and obviously you guys are doing your thing, and I know things are going incredibly well for you. Obviously, we've had some private chats away from streams, and like Jamie, you're doing incredible, and I think recognition needs to be there. But listen, I know some people we're into the new tax year now, and some people won't have done the bits they need to, but it's not too late, is it? So if people are thinking, oh God, the time's running out, how long have I got? Just talk them through a little bit about that and what they can do if they do feel they need any help.
Yeah, I mean, the first thing to do really is just have a look online. I've personally got lots of material they can look at. I've even got a cheat sheet on YouTube specifically telling you what you to look at, what not to look at, with some updates as well, just to get a bit of understanding. And if they're in a situation where they just want to know what the numbers are saying, whether it's a gain or a loss or whatever it might be before HMRC come knocking, that's exactly the sort of person we want to talk to, because the issue isn't what is the tax rate on the crypto gains. The issue is, what is the gain? Because we don't know the cost because of the 30-day rule, because the data's over here and over there. Where is my data? Hold on, I am missing data. That's the problem. So that's the sort of problem we aim to solve specifically first before moving on to anything else.
Good. I think if anybody does feel like they have a genuine need for a tax account, not just to have a chat to somebody about crypto, but actually they've got a need. There is a tax bill potentially there that could be incoming, or locking in losses. That's the other thing. Listen, last tax year would have been brutal for some people.
Yeah. So
looking at locking in losses that we can cash in later on is going to be a good idea for some people. Now, we have a link for people that I'll put in the description of this video. But I would encourage people to do, when you click on the link and you fill out the form, it'll ask you where you're coming from, and write down how you've come across Jamie. Is it from the podcast? Is it from the Milkshake Money channel? Is it from the Paula Talks Crypto channel? Write it in there, because it's good for Jamie to learn about where clients are coming from. So fill out the form, and if they do that, and then they'll be able to get a consultation, won't they, with either you or one of your team. How long do they get? Because I always seem to get this time wrong. Every time I say a number, you say it's wrong. How many minutes is it for a consultation with you guys for initial? But usually the initial consultation is free. I did say that.
Yeah, so basically, if they tell me that they've come from you or Paula, they'll have a free consultation, assuming they need some form of service. Absolutely. And they normally last about 45 minutes. I encourage them to get the data as much as possible into one sort of place so that we can actually go through it, where the issues are, propose a fee, etc. Not a problem. Now, if they do want to have a general chat, that is fine. Just make sure you let me know in the consultation, because I have to charge for that, obviously. If you want a general chat, that's fine. You're just going to pay for my time, no problem. But if you're coming through with a genuine opportunity for perhaps taking up services, then if they've come from either one of you two, it will be completely free of charge, no strings attached. You could turn around and say you don't like me, you don't like my fees, you don't like the service. It doesn't matter. I'm not going to charge you if there's a genuine opportunity for potential sign up. But I'd always encourage everyone to get their books in order. Now, you mentioned a couple of reasons why people might want to come and have a chat, and you're absolutely right. Yes, it's not just about the gains, it's about the losses that you want to bank. Now, my worry is that come probably March time, when HMRC really start to crack down, they're going to send letters, because they've already done over 100,000 letters. They're going to do more, saying, do you categorically, yes or no, have anything to declare? Now, handling that within 30 days is almost an impossible task for one tax year, let alone multiple tax years. And handling that yourself within that time period is insane. Now, unfortunately for them, someone like ourselves can help, but if you think historically you might, best thing to do is get all of that dealt with now, and then you go, yes, you do, no, you don't, fantastic, either way, you know how to solve it. And then if HMRC say, excuse me, sir, we believe you have something to report, let us know categorically, you can tidy up the rest and go, yes or no, categorically, you do or you don't. And if you do, we'll handle it. And if you don't, you've got evidence, because we build a case for you in case HMRC challenge it.
Yeah, absolutely. And I think you are still niche in this space for people, and especially within the accountancy world. There are not a lot of people that you can go to that can give you the reassurance that they understand the information enough to be able to sign off your taxes and be able to say, yeah, we've got this right. So I think if anybody is out there and it's playing on their mind that they do need to be reporting this or they need to be looking into it further, I would just encourage people to reach out to you, because more and more people are getting involved in this space. The rules are not easy. They're never easy with HMRC, but crypto particularly at the moment isn't easy because the clarity isn't there. So I would just, anybody that's watching this, if you are unsure, if you're unsure that you've got gains that need reporting, if you think you might have some losses that you want to lock in, these are the kind of people that probably need to be reaching out to you, Jamie, to be having a conversation to say, how do we handle this moving forward?
What I would say as well, because I've realised this is quite a common theme when I'm talking to people and just tax comes up. If they are already self-employed and already have accountants, don't worry. Doesn't mean you have to use a different accountant. You can just get Jamie to do the crypto section.
Bit, yeah.
You can still use the accountant you've always had, because I can almost guarantee, and I know this from personal experience, so there's a niche element in my life that means I need a specialist accountant, and my specialist accountant knows absolutely nothing about crypto. So Jamie will do the crypto section, and I will take that information that he's prepared, and I will take it to that accountant that does the other complex part of my life, and we put the two bits together.
Yeah.
So you don't necessarily, if you're looking at it going, oh, I've already got an accountant, I'm really happy with them, but your accountant knows nothing about crypto, don't worry, you can separate the two sections. Are you okay with me saying that, Jamie?
Yeah, absolutely. Don't get me wrong. We do handle everything. I'm a fellow member of the ACCA, so we are fully chartered certified accountants. But that's exactly it. We would deal with the data, reconcile it to a point where we believe is as correct as it can be, and then put it in a format that is understandable for accountants to take the data and go, that's what I need to put on the tax return. They don't have to worry about the calculations. They don't have to worry about the liabilities. They just include it in the tax return. We've got the backing and the proof, and it just makes everyone's life easier. Don't get me wrong. It costs a little bit more, but the honest truth is we will not be the cheapest, but we will not be beaten on quality.
Yeah, I think
exactly.
That's a nice way to wrap it up.
So just before we go, Jamie, can you just let everybody know your handles on socials? Because you are putting out information as you're getting it from HMRC. Yeah,
everywhere. So it's CryptoTaxJME on X, on Instagram, on TikTok, on YouTube, of course, yes, on YouTube. And if you want more of a professional setting, then LinkedIn, Jamie Nuttall, I should come up fairly easy. You're welcome to follow me on any of those, connect on any of those, and please do comment. I will get back to every single question humanly possible. DMs are not preferred, but as well, if you're in a situation that's a bit, anonymous or you don't want people knowing, you're welcome to DM me as well.
And also, we'll leave your link in the description of this video if people want to reach out to you for a consultation.
Yeah, lovely.
Awesome. Jamie, it's been fantastic. Thank you so much for joining us again today.
Appreciate you, brother. We'll see you next time, because he's now a regular guest.
He is.
He came as a one-off.
Yeah.
And he's now the regular go-to tax expert. Well done, Jamie, mate. We appreciate everything you do with us, mate.
Thank you, Jamie.
My pleasure, guys. Cheers.